Hey, welcome back. It's the day before Thanksgiving. I hope you're all planning to have a safe and happy Thanksgiving this year. It certainly will be one to remember. Today I'm talking Avepoint. Avepoint and Apex Technology acquisition. Another stock that is merging via SPAC, Special Purchase Acquisition. That merger will take place probably in January of 2021, or at least by the end of the first quarter of 2021. Now, you might not know much about Avepoint or what they do, but if you work for any of these companies, then you've probably been using their products. Today, I'm going to describe for you what Avepoint does, why they do it, and tell you why I think that this could be a good stock for you. I certainly have already purchased it. I just purchased some of it yesterday. Avepoint works in partnership with the Microsoft Cloud. Now, if you or people that you know are using Microsoft Office tools or Microsoft Teams, in fact, my company recently went to Microsoft Teams, so I'm just getting used to this Microsoft Teams, then Avepoint helps your company efficiently use those and safely use those by controlling compliance and governance and helping with the transformation. Why is that important? Well, Microsoft provides Word and Excel and Outlook, but they don't necessarily control who gets access to which documents in your company, or whether they're using them correctly, or whether their documents, semi-sensitive documents, might be sent out to a place that you don't really want them to go. Avepoint software then helps control that for you. So here's what Avepoint offers for their users. You can see they get the full benefits of the Microsoft Cloud. They protect and prioritize the data. They will enhance collaboration and automate a lot of tasks for you so that your business can do business instead of worrying about the safety of your data and whether people are complying with policies. Why do they do this? Well, because all organizations need help managing their data. Data is king now in a business, at least in many of them, and governing that data with the volume of it gets more difficult. You need to know who can access it, when to alert when somebody has accessed something they shouldn't have, when things can be deleted. Boy, there are a lot of rules about documents and how long they need to be kept, and you certainly don't want to delete something that shouldn't be deleted. And the penalties for failing to do this certainly get larger and larger, both from a privacy standpoint, cybersecurity standpoint, and then you also have to think about life cycle management of data. Now, all of this has only accelerated during the pandemic right now. Microsoft Cloud is certainly gaining significant momentum. You can see here that they're saying 2 years worth of digital transformation in 2 months. Now, while Microsoft doesn't necessarily rule the roost when it comes to the cloud, you can see that they have their hands in at least 3 separate categories here. So we have IaaS, which is infrastructure as a software. We have SaaS, which is service as a software. And then you can see productivity and collaboration. Now you can see Microsoft leading in 2 of these in terms of market share, the service as a software and productivity and collaboration. And you may be thinking, wait a minute, I thought we were talking about Avepoint, not Microsoft. But Avepoint helps companies run their Microsoft software. So you can see how Avepoint has a decent sized share of the market just based on Microsoft's share of the market. So what is a decent sized share of the market? Well, at the moment it's 7 million users, and you may be thinking that's not very much. Microsoft 365 users total about 250 million. So Avepoint has about 3% of those. Now what is that going to look like stretching that out into the future? Well, they're estimating 500 million Microsoft users, and they think they can get to 10% of that, so 50 million. You can see here their forecasts showing that by 2022, the total addressable market then could be 1.8 trillion. 10% of a 1.8 trillion market, even only with 10%, that is a company that's doing a lot of business. Just to review, I already showed you who's already using their software. You can see here some pretty powerful names. And here's their plan to capture some of that additional market share. They already have a high retention rate. They have a large sales force, and they're growing that so that these new users who expand into the Microsoft Cloud will see Avepoint as a valid choice to manage their data. They say they have a goal to capture the entire Microsoft customer cloud base. Probably not realistic, but why not shoot for the moon, right? Shoot for the moon. Hit the stars. Still pretty good. Here's how Avepoint's doing financially. You're looking at an average growth of about 20% year over year for these 6 quarters that you see in front of you, ending Q2 2020. And they break that down nicely for you by recurring revenue and annual revenue. Here's how this transaction is going to go down when it finally does. The company is being valued at approximately $1.7 billion, or 9 times the expected revenue for calendar year 2021. The existing Avepoint shareholders will still hold 72%. The Apex public shareholders will come in around 18%. And of course, there will be some more private investing going on. That's what the pipe part there is. Of course, the current Avepoint shareholders will get some money back, as they should, for investing early. Avepoint is elite in its class. Now, what do I mean by that? Well, you can see here that there's 212 software companies listed on the NASDAQ or the New York Stock Exchange. Of those, 137 of them have at least $150 million in revenue, at least expected for 2020. And of those, only 32 have 25% revenue growth taking place between 2019 and estimated 2020. Of those, only 5 have greater than 10% earnings before interest and taxation margin. And there they are. There's the companies that you can see: Atlassian, RingCentral, ServiceNow, ZoomInfo, Zoom Video Communications. And once Avepoint actually goes public, we'll be adding them to that list. So why do I think this could be a great stock to buy? And why did I already purchase it? Well, one of them is the price. It's a fantastic price at the moment. I showed you earlier, they're coming in at 9 times expected earnings. And the price here, $11 a share. That's fantastic, especially for a stock that you might hold for who knows how many years. Services as software companies in general have been doing very, very well lately. You name it: Fastly, Alteryx, Datadog, and more. Another reason why is the expected growth. As I showed you earlier, someone had to say this: 2 years worth of digital transformation in 2 months. A lot more people are working from home or remotely. And you see this little sticky here: 95.4% projected growth in desktop as a service for 2020. I only see that increasing out into the future. Once again, do your homework. Decide if this company is right for you. I decided it was good for me, and I purchased some of it yesterday. Again, the stock price is pretty attractive at the moment, and I hope to see it follow the path of some of those other services and software companies that I mentioned. Until next time, have a great Thanksgiving, and we will see you later.